What's up traders, welcome to Failure to Displace. In this video, I'm going to go over how I use displacement or a lack of displacement to help me identify my draw on liquidity and establish a bias for the upcoming session that I'm going to be trading. First up, I guess we should establish how I view displacement. So displacement is essentially very large candles that leave inefficiencies and break over structure. So we want to see an aggressive move with a break of structure leaving an inefficiency in the market. That would be displacement. Here we can see candles aggressively moving away. They've taken this high, they've shown no sign of coming back again and are moving quickly away from this point of interest. Likewise on the return, we have broken structure here with a huge displacement candle, so price has moved quickly away from the area, showing us that there is a sell program in play. So when price starts moving aggressively away from a point of interest, we can be confident that either a new buy program or a new sell program is in play. The algorithm, smart money, or whoever it is that you believe moves the market, they have a new target in sight. And as long as we're trading in line with that target, then effectively our win rate should be significantly higher. On the flip side, if we see a lack of displacement when price takes highs, this can give us more of a clue. So this is a failure to displace. Little nod to the channel name there. This shows us that price isn't willing to leave this range and will likely retrace back to pull some liquidity further back down before it can make another attempt at the high. So this is a really lovely example. Price took the London high, was unable to displace higher, and therefore had to come back into the range seeking further liquidity before it could take another attempt to the high. When we see displacement breaking through a range, we can expect the price to continue. If we see a lack of displacement, a failure to displace, and potentially displacement back into this range, we can look for other objectives as a retracement. Let's jump into some more charts just to show more examples of how these various patterns play out. In this first example that I'm going to show you, this is from today's current price action. So Monday was a bank holiday in the US, so we had very limited price action on Monday. However, we'll follow our usual process, marking out our session highs and lows, previous day's highs and lows, to look for points of interest where price might seek some liquidity. So we've got Friday's high as our extreme buy side. We have a Tokyo high from yesterday, so this is yesterday's high, Monday's high. We have untapped London high from yesterday. And we have untapped New York high as well. We've even got untapped Tokyo high, so relative equal highs here as we're coming into the session, which look like they're just about to get run now. So we can check for displacement here to see whether the price is going to continue higher or potentially come back in the range. As far as sell side, previous day's low. We've already taken the low from New York session yesterday. So we have a new low from the Asia range today. There's quite a few levels on our charts just to look for potential areas of displacement or failures to displace, just to give us a bias for which way we want to be trading. So let's jump onto the 1 minute chart. So we're just about to enter the London trading session. London opens here 2 AM in the morning, which is 7 AM my time. So London has swept the high from Asia, we can see, but it's pulled straight back inside the Asia range. So if we're looking for a short position, we're going to be looking for displacement now into the range to give us an entry. So our break of structure would be this swing low here. So this is the low that was created before the high. We have a candle higher to the left, candle higher to the right. So this is our swing low. So we need price to break this structure with displacement to signify that we are going to be retracing even further into the range. So let's take a look at this. So we've produced displacement here. We've not broken this low yet. So we have got some displacement, but we want displacement over the low. So So we've taken the low, but we can see that we've rejected straight away. Let me zoom in on here so we can see this a little bit better. We've pulled down, we've taken the swing low without displacement. So this is a failure to displace, which means I'm not going to be looking to engage here because we've not displaced over this structure. Again, we're taking the low, no displacement, pulled straight back in. So now we've got an aggressive move back in again. And we can see it was a good choice not to take that entry because we haven't displaced lower. So we're now taking a new run at the high, and we can see that we're getting displacement above now. So here we can see we are now currently breaking structure. So we're taking these swing highs. This swing high was broken with displacement. This swing high was broken with displacement, and this one is currently being broken with displacement. So we can see that we've still got a bullish buy program in play at the moment. The displacement is to the upside. We are breaking structure with displacement to the upside. So our next point of interest is our high here, which I believe is our New York high. Yes, so this is buy side from yesterday's New York session. So let's see how price reacts when we take this. Pull back, so we've just swept the high. Broken above the high with a bit of displacement. So we're not rocketing away from the high, but we have got displacement over that break of structure. Our swing low currently is this candle's low. Consolidating. Okay, so we have broken this swing low now. So we can see that we had a lower high here. We pulled back, took out the high, I've pulled back and broken this structure. So this is our break of structure on the bottom of this candle. Looks like this potentially could be a displacement candle. So if we break away here, leaving a fair value gap, this would be a break with displacement, which we've done. So not only have we left a fair value gap, we've actually also left a volume imbalance. The open of this candle dropped lower than the close of the previous candle. So this gap between the two is also a volume imbalance. If you see a volume imbalance stacked with a fair value gap, it's pretty good confluence. Again, over a break of structure, we have an order block above us. We have a breaker block here as well. So the last down close candle before this break of structure higher, and then engulfed. So this would be our breaker block. So there's lots of reasons here why we would think this could potentially be a short trade here. We've broken above the high. We haven't really displaced. We can see a strong displacement back into the range. Let's remove this previous high because it's closed. And this would be somewhere that we would look to get short. So I would take it from the fair value gap. My trading plan is a 5 pip stop loss with a 5 pip take profit. So 1 to 1. Let's see if this gets entered. So we're pulling away. We've just tapped the entry. The 50% of fair value gaps is always a sensitive area. So I like to use this GAN box just to see if the 50% is getting respected. Currently retested the bottom of that. We've pulled in. So we've closed at the 50% of this fair value gap. Closing again, respecting the 50%. Closing higher. So the 50% has been closed. We're now into this last order block here. Price is pulling away nicely now. Let's remove this GAN box again so we can see. So we've left another fair value gap here. Let's remove this break of structure so we can see what's happened at this point. So it looks like the 50% of the order block, consequent encroachment of the order block, was respected. So that's where we pulled back to. And then price is driving away now, leaving displacement again back into this range. So we can just see by looking at this fair value gap indicator that the price structure went from bullish fair value gaps all the way along here. Now we are building now bearish fair value gaps coming down. So this is showing us that we are on the right side of the market and we're potentially into a sell program here. And there's our 1-to-1 hit. And 2-to-1, a little bit lower. We would expect for this to play out that the Asia low, which would be the other side of the daily range, so this is the daily low now, would be the ultimate destination for this liquidity. If everything plays out as expected, we could be seeking the Asia low. So that looks like 2-to-1 was hit. We can see again we're still building bearish fair value gaps. 2-to-1 has been hit there, and then potentially run it to take out the lows of Asia. You see here we look like we are rejecting off a higher time frame order block. So that's back at break even, so that would definitely be a break even trade for me. And we don't take out the Asia low at that point. So we got a good retracement. We took some liquidity here before pulling back. If we take a fib from the low of the Asia to the high of the London session, we can see that we actually retraced back to optimal trade entry, so the golden zone, and on to a higher time frame. So yeah, on the 5-minute, we had a 5-minute order block just here, which price tapped perfectly on the 786 Fibonacci to send us higher. I hope that explanation was useful and you got some value out of seeing how I'm viewing displacement and how it helps me tell the story of my bias going into sessions, specifically when I'm looking to scalp on the lower time frames. Please leave any questions down in the comments section below. Like and subscribe if you're enjoying the content, and again I'll be back shortly with more video updates. Thanks guys, see you soon.